Assalamualaikum warahmatullahi wabarakatuh and hello everyone. In this video, me and my team members would like to present about topic self-assessment system for company taxpayers in Malaysia. We will introduce about key tax compliance procedures and obligations that company needs to fulfill when submitting tax returns for the year of assessment 2023 under self-assessment system in Malaysia. Before we go deeper about the topic, let me introduce first our group members. Me, Alissa Maisarah, my other team members, Amirah Khairani, Fatin Nabilah, Hamizah and Humaira. For the first key tax compliance procedures and obligations that company needs to fulfill is tax estimates. In accordance with Income Tax Act 1967 Section 107C2, every company, limited liability partnership, trust body and cooperative must submit an estimate of income tax payable. The estimate must be submitted at least 30 days before the beginning of the basis period, and the estimate should be submitted using prescribed form, which is Form CP204. The estimated tax payable also, as reported on the form, must be not less than the estimate or revised estimate of the tax payable for the preceding year of assessment. Next is Income Tax Act 1967 Section 107C3. Provides that the minimum amount of the tax estimate for a year of assessment must be at least 85% of the income tax payable. And this estimate is also based on the estimate or revised estimate of the income tax for the preceding year of assessment.
We are going to talk about the monthly installment next. Once tax estimates are approved, companies, limited liability partnerships, trust bodies, and cooperative societies must make monthly installment payments. Taxpayers are required to pay their estimated tax liability in equal monthly installments over 12 months. If a taxpayer does not have a full 12-month period of a year of assessment, the estimated tax payable will be divided by the actual number of months in that assessment year. For existing company, installment payments begin in the 6th month of the basis period for the year of assessment, after the company starts operations. For new company, they must pay estimated tax in equal monthly installments starting from the 2nd month of the basis period for the year of assessment. Both existing and new company installment are due on the 15th day of each month. Their payments are calculated as a percentage of the estimated tax, and they must ensure timely payments to avoid interest charges and penalties for late payment. Now, let's talk about the penalty under installment scheme. If a company fails to pay the monthly installment by the 15th of the following month, a 10% penalty will be charged on the unpaid amount. If the difference between the actual tax payable and the amended or initial estimate, if no revised estimate was submitted, exceeds 30% of the actual tax payable, a 10% penalty will be imposed on that difference. 10% penalty will be imposed if the remaining tax payable is not paid by the deadline.
Next, revision of tax estimates. According to Section 1073 Subsection 7 of the Income Tax Act 1967, a penalty will be imposed if the difference between the tax estimate and actual income tax payable exceeds a 30% margin of errors. To avoid penalties, entity must revise their tax estimate. Next, revision to the estimate income tax payable submitted via Form CP 2004 can be made during the 6th month, 9 months, or both months of the basis period for a year of assessment. Lastly, the tax payable for the remaining months must be adjusted upward or downward based on the revised estimate.
Next, submission of tax return form and payments. First, tax return form. Companies must submit their tax return form to the Island Revenue Board at the end of the financial year. The deadline for submission is typically within 7 months after the end of the company's financial year. For example, if the financial year ends on December 31st, the form must be submitted by July 31st of the following year. Online filling of the tax return form is available and encouraged by the Island Revenue Board. Second, payment of tax. Tax payable is based on assessment is due by the last day of the 7th month following the closing of accounts. Monthly installment payments begin from the 2nd month of the company's basis period. However, If a company starts operating during a year of assessment with a basis period of less than 6 months, it is not required to provide estimate of tax payable or make installment payments. Their penalties. Non-submission of tax estimate is an offence under Section 120, Subsection 1, Subsection F. Upon conviction, a company should be liable to fine RM200 to 2,000 ringgit or imprisonment for a terms less than 6 months or both.
An amended return shall only be made after the due date for the furnishing of the return, but not later than 6 months from the date of submission of such tax return to Inland Revenue Board. The amended return shall specify the additional amount of chargeable income, the additional amount of income tax payable, the particulars as may be required by the Director General, and last but not least, the late payment penalty. However, taxpayer is allowed to amend their return once only. The submission of the amended return is deemed as notice of assessment. Any tax and penalty shall be due and payable to the tax authorities. However, the tax or additional tax payable pursuant to an amended return will only be increased by 10% penalty of the amount. The then 5% penalty imposed on amended return furnished after 60 days has been abolished.
Next is final payment of income tax. According to income tax payable provision, which is effective from 1 January 2030, the remaining balance of income tax payable under the deemed assessment provision is due on the last day of the 7th month following the close the accounting period. If the accounting fails to pay by the due date, the unpaid balance will incur a 10% increase and will be treated as a tax due and payable. However, company that disagree with the late payment penalty can submit a written appeal to the relevant Hashim office within 30 days of receiving the statement of account. Company must pay the tax liability even if they file an appeal against the assessment. Okay, that's all from us. Thank you.